Good evening. I hope that you are having a lovely evening. My name is Carol Jenger. Let's now take a look at the latest in the world of business. Revenue collection is likely to drop this fiscal year due to the minimum in excise tax legal row. The Kenya Revenue Authority Director General Githii Mburu says though the authority will institute more measures to meet tax targets, the decision by the High Court that is stopping this collection of the two taxes will significantly dent the overall revenue target of 1.88 trillion shillings. Last month, the High Court in Machakos barred Kenya Revenue Authority from collecting the minimum tax of 1% on gross revenue and issued a conservatory order stopping the taxman from adjusting excise duty rates for petroleum products and other accessible goods such as beer, wines and spirits, bottled water, food supplements and imported motor vehicles. Speaking during the launch of the Taxpayers Month, KRA Commissioner General Githii Mburu says the decision by the High Court will have a negative bearing on the overall revenue performance for the financial year 2021-2022.
If we do not implement those two taxes, we are going to significantly dent our fiscal space. As a country, it means that we are not going to be able to fund certain objectives that the government has set out to do.
We are saying that all taxes that we impose to Kenyans, they are well researched, and we are not in any way saying that those taxes were just some imaginations.
KRA had targeted to collect 3.7 billion shillings from the 4.97% inflationary adjustment and 20 billion shillings from the minimum tax.
If we lose that money, then it means we have to cut down somewhere else on certain services, which I believe is not good for Kenyans.
The taxman says they have served notice of appeal to reverse both rulings and are waiting for the mention or hearing date.
Minimum tax is a very sound tax decision or policy measure. A business cannot continue making losses and not closing down, enjoying the services of this country and not paying a penny.
Consultations are, however, ongoing with the National Treasury to see if the adjustment of the fuel levy is a viable option, keeping in mind that funds for road maintenance are primarily derived from fuel levy, which is charged per litre of petroleum imported.
There are challenges to do with global prices for fuel, and therefore when we add our inflation adjustment, is going to affect Kenyans more. There are discussions going on around that area. To see whether we are going to implement that inflation adjustment. We are consulting on that.
KRA says the journey to raise 1.88 trillion shillings is still on course, with plans to expand the tax base by adding 2 million taxpayers by the end of next year.